Hello, YouTube. We got a big pump for Tesla. It just did it, or it has a big Nike swoosh. And with this massive gap on the chart, and with big tech putting out its best first half ever, we want to know whether or not there is more hype for big tech and whether Tesla is becoming a new leader. So we're going to look at gaps that were established into last week. Gaps were established almost a year ago now, and how last time when we gapped down, it led to the massive move lower. And ever since we've gapped up, going back here to January, we haven't actually filled that hole. And now we have another hole. And now we got another one, which means Tesla is putting in gaps and go. That's going to be so interesting because when we look here to Elon, he might be a little bit of an evil genius. Look at this pose. Look at the face. Look at the hands. Look at Mr. Burns. That's right. From The Simpsons. What has he got? Man, looks strikingly similar. A little bit of a grin. He's got the excellent pose. And Elon did it. Everyone wants to be a critic, but Tesla and BYD delivered record sales on surge in EV demand, delivering nearly 500,000 vehicles. That is a lot. So because we're wondering whether or not he is an evil genius, we want to ask ourselves the reason why. And that's because the NASDAQ has put in its best ever first half of the year with a nearly 40% gain propelled by big tech and AI. So true to form into this weekend and into the session today, we note that fear and greed pushed up to 85, which is a higher high in the last 52 weeks and something we specifically talked about on the weekend deep dive. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. And in terms of Tesla becoming a leader, let's look here to Tesla's earnings, which are going to be on July 19th. And the reason why this is important is because they are going to be one of the first companies to report out of big tech or those FANG stocks, along with Netflix. With a golden cross here as well, it's going to be interesting. Even though it's running into earnings, I think Tesla actually has one of the best chances to do well on earnings. And the reason why is because only 25% of analysts say the stock is currently a buy. 8% say buy, 14% say hold, 2% say sell. And when we look here to a stock like NVIDIA, which is now claimed at $1 trillion value, it reports after Tesla. It reports at 420, so Elon's a little bit jelly of that. But looking here to the analysts, 90% say buy, 3% say hold, right? So sorry, 90% say buy, 10% say hold. Stock better crush it. It's running hard into earnings. It better make sure it crushes. So if we think about the relationship between this most recent gap where it was left unfilled until almost 9 months later when we finally filled it, well, now maybe that same thing can happen here as we go higher. Think about this going into earnings for Tesla. We heard about record sales, record car deliveries, but what we've not heard about is the actual earnings implication. What that likely means is that sales are going to do well. Earnings might be revised higher for the rest of the year. But additionally, GM, Ford, Rivian, and I don't know who else came onto the supercharging network station for Tesla. That's likely going to impact their earnings, meaning what? Higher. And this might be the iPhone moment for Tesla, which means that their cars are cool, they're sexy, people want to buy them, but charging them up is what really makes the money. So charging them is what really makes the money. And everyone's now on board. EV train is picking up, and it's looking pretty good. So look at this gap right here. I want to note the relative high here at 277, basically. And with the current pattern on Tesla, gapping go, which means we're closing higher than we opened. That open is at 276.49, which means it opened up right near resistance, and then boop, it just blew through it. There were not enough sellers to hold it down. But this area is going to be a massive pivot. If we form higher lows and higher highs, the stock is likely going to do what we just showed you on NVIDIA, where it goes higher. If it fails to hold the gap, the question is going to be what happens here on the gap fill. And this will be very important, not just for Tesla, but also for the indices, including QQQ, S&P, because we have gaps in the chart here. If we zoom back in time, what do we got? Well, we got a few holes. So we got let's delete everything. We have a gap here going back to late May. And now we have a most recent gap here that we just established. So there's those two gaps. As long as we remain over the gap areas, it's looking like the squeeze can continue. We're at an apex here as well, where we're trying to claim March of 2022 areas, which was also the head and shoulders neckline for this bear market where we went down a lot. So if we're going to get a fresh push, right, or a squeeze to continue, we showed you the fear and greed, which is pushing up. QQQ is closing green on the day. We got higher lows. We got higher highs. We got to bounce off that 369 area we just identified. And this will be very important because when we look here at companies like Apple, Microsoft, they're down a little bit today. Healthcare is a little bit red, but it's a pretty boring day. What I want to pay attention to specifically is going to be a name like Apple. And the reason I want to look at a name like Apple is because if we look over here to the chart on Apple, every time it has hit that illustrious trillion level, first it was 1, then it was 2, and now it's 3, it is always sold off every time. So right now, Apple is worth basically 1% over 3 trillion. So if it repeats today, tomorrow, and then a little bit more, it's going to be falling back below that $3 trillion value. And that'll be important because I'm not sure what's going to create the downfall for Apple. Well, this stock just did it. It did it for a long time, right? Woof! Look at that ramp. And we got some gaps here too. We got a gap going back here to March. We got a gap here in March. We got a gap here in May. We got a gap here in May. And now we have our most recent gap. So we just want to make sure that if a corrective wave is going to begin, we're very, very mindful of that. And when we look here to our most recent pivot as well for Apple going into its VR launch, right? Over it, back test it, and then push off, which is what we just laid out on NVIDIA as well. So for Tesla, what that can mean is that we're actually going to be making a run up here for that 350 area. We talked about that on the weekend. We're going to have to see names like Microsoft join the all-time high club, not just poke into it, but actually claim it, or Google a little bit down, actually up today. Amazon down a little bit, making big moves though, but not at that all-time high zone here. Looking to NVIDIA well into new all-time high territory. Meta, pretty close, but not quite there. And then Tesla, like we just talked about. So I think that it's going to be very important for us to keep track of these things as we go forward from here. Something else I want to show here is just looking at dark pool prints. And here we're going to look at the last 1 month. So we're going to go back here to June 1st to July 3rd. And by the way, happy Canada Day to all of our Canadians. And then also happy 4th of July to the Americans. We thank you all. And we just want to look here to dark pool levels for Tesla. There's been $39 billion transacted, but we want to know what the profit and loss is. So there are currently 94% of levels which are bullish for Tesla for both dark pool and for lit pool. And what that means is that collectively, just by buying shares, the bulls have made $1.9 billion in profit. That's right. That's a big number. And what's so interesting about Tesla's numbers as well is that we got another GDP revision here for Q2, which is currently at 1.94%. So the recession, which seems more and more, right, it seems fleeting, is not happening, at least right now. So as those numbers continue to come in, we also cannot forget we're going to have Fed minutes coming in on a Wednesday. So after our holiday tomorrow, what's the market going to do? Well, QQQ has that higher high and higher low. The S&P does not. We need to get above 450. So if we can't get above that area, it's pretty close, but it's no cigar quite yet. And we laid out a lot of information on the weekend. So what I really want to do here is just zoom into some weekly charts because I think I want to just pay attention to whether there is strength or weakness as we open these candles. We're going to talk about the heat map for here for one more moment too. And that's just because when we think about the heat map for the 1 day, we want to think about what was doing really well year to date, and then just whether or not it's going to continue. Remember, window dressing means that people want to pretend that they own the Fantastic Seven, the FANG stocks, ever since the beginning of the year. And if they're just pretending, we should see exactly what we see here, where they're starting to sell them off. The biggest blocks, Apple, Microsoft, they're red. Google, Amazon, NVIDIA, basically flat. Tesla is up. But that fear and greed is really, really rocking to 85. So what I would want to see is I'd want to see stabilization in big tech, if not higher highs. And I want to see more groups participate. Let's go through a couple of charts really fast to see what the current market's looking like. All right. So we got RSP, weekly higher high, higher low over last week's high as of the close here. That was an important one. Then the Dow, not quite double top, 3445853. So that's a double top. It's looking okay. It's a double top so far, though. In post-market, it is over. So that'll be interesting going into tomorrow. And then we were looking at small caps or the Russell. So when we look here to the Russell, higher high, higher low, but back below last week's high, which means it's a failed breakout, even though it is green. So I want to pay attention to those charts specifically. And then there's two more because you might have forgotten that these ones also matter. It's the 2-year note and the 10-year note. So the 10-year note here, which is the 10-year bill from the government, it's a government bond. We're showing here that we got a hammer, and this is likely due to what happened in Europe overnight. So overnight into Europe, we saw what happened in France, and bond yields rose in basically all countries around Europe. So that led to the 10-year note going up. And then for the 2-year note, which has been on a relentless tear here, higher high, higher low over last week's high. So there is a massive disconnect right now between what the bond market is telling us. It wants to win, and it is winning. It's right near the relative high, and what the stock market's telling us. So please make sure to drop me a comment. And if you want more content, the weekend deep dive is now queued up here over on the left-hand side, where I went through a lot of this information. And with that said, I thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.